So let me ask you this. So this is a mid to higher time frame. We're looking at a 1 hour time frame here. Looking at what you're seeing here, and don't go looking at GU. Just focus on what I'm gonna talk to you about really quickly. When you look at this right here, and this is playing off of, actually I won't even talk about that just yet. When you're looking at this, right? It's Tuesday. Here's yesterday's price action here. We had a nice manipulation candle. Let me turn on the highlighter. Highlighter might help a little bit. Let me know if this is too much, this purple or this red. So we have this manipulation candle right here. You can see this pushed below these lows here before nice impulsive move up here during London session. During the overlap, we had a retracement. This was a rebalance here, rebalancing this impulsive move here, right? Price came all the way back down, pinged this candle here. Now, this isn't the setup I'm talking about. The setup I'm referring to is something from today, okay? I'm just running through this, all right? So then we had a test into that manipulation candle, and then we had a continuation up here, running on this high here. Then when we ran on this high here, price started to retrace down here, rebalancing, come to these lows here. And when I started looking at it today, right, this is London coming into New York, London overlap. We are in this candle here. What are most people doing here? If you were looking at this, what are you looking for here? Nothing at all? Is this a buying opportunity for you? Right? And think of your trade plan, your approach to the markets. Maybe it's with these concepts or not. What are you doing here? Is this a valid buying opportunity for you? Are you looking for selling? Is there nothing there yet? Would you need to see something else before you buy or to sell? What do you, I want to know what you think about this price action here. And then I'll go into showing my markup and talk about the approach that I'm referring to in a little bit more detail. Okay, so Max says buy, so he'd be looking at this, right? And this is, what we refer to as a double tap, right? A double mitigation. We had a nice strong push here. Here's our expansion, nice engulfing candle, right? A retracement into this, showing some good reaction. 1, 2, 3 wicks, price push below that. Looks like it's starting to push up. Market looks bullish. That looks to be a smart money flag to buy. No break structure yet, says Pete. Okay, so there's a few things here that are really going to help a lot of people. Okay, I want to see it like 5 more responses before we dive into this. And keep in mind too, like there's no right or wrong answer, right? Like everybody's going to see the market differently. Everybody has different trade plans. People trade different things based on their beliefs, their aggression, their style, right? So there is no right or wrong answer, right? We can just formulate, high probable setups based on our proven trade plan. That's all we can really do. So I'm just curious to what most people will think about this setup. And then I'll dive into what I'm looking at or what I was looking at, and I'll show you the trade that I got stopped out of. Would check the wick on top, what it has shown on lower time frame. Depends on higher time frame. It could be overall downtrend. All right, so based on that, I'll zoom out. Looking to buy, still bearish. I saw this as a retracement from the NFP, my man. Looking for buys as it created equal highs. I can't C2L, those rejection candles look like they might be around a mid-level figure. Not convinced of a move yet, as the last candle is mostly wick, not body. I'm buying based on the pin bar rejection of that zone. Okay, so a lot of people have a general consensus of buying here, okay? So there's a couple of things that I want to talk about that are going to shift your approach. First and foremost is, it goes without saying, especially if you've been around this group for any amount of time, or if you've been, in my education for any amount of time, what is one of the big things that we're trying to align ourselves with? Manipulation. So playing on the big picture manipulation here, where did that happen? Who knows where that big manipulation here that took place that we want to pay attention to? Where is the manipulation that we really want to focus on? Actually, I can leave those there. Where is the manipulation? We're looking for a run on highs or a run on lows that produce an impulsive move, an aggressive, impulsive move. And we're typically seeing these in New York, London overlap. NFP Friday, and that is correct. That is this here, okay? Look at this strong move here. And then we want to, our eyes should be naturally drawn to that. Same thing here. Look at this big move and what happened before it, right? But we want to pay attention. All of this price action here is trading internally. It's trading internally from this range here. That's swing high to this swing low. That is the range. This is the manipulation here. And that happened last Friday at NFP, right? You have this bearish move here, right? All of these highs here, price pushed up aggressively above all of these highs, right? Stop hunt, whatever you want to call it. And then look what happened. A massive move to the downside, creating a swing low. So that is the point of interest that we want to look at. So with that being said, looking at the higher time frames, this is a bearish. We're selling in here. We're selling in here. And here's the thing that you want to pay attention to. Okay. And I'll show you my markup in just a second. And I'll show you my points of interest. I'll show you my targets. But this is the approach that you need to have. When you're looking at a markup, or if you're looking at the price action, right? If you pop on this morning and you're looking at, the setup, and you're looking at, marking things up prior to the New York London overlap, right? Well, I'm going to ask you first, what do you think one of the big things that are running through my mind is when I'm marking setups? Like this morning, for example, what do you think was running through my mind? And what do you think it is that I am always constantly thinking about in terms of my setups, where I'm putting my stop losses, my entries, and my targets? Let's see if anybody can get it. It's probably the number one factor I look at when approach that I have when I'm marking up all of my setups. What do you think it is? Not necessarily equal highs or equal lows. It's just think about what traps in a sense. I'm thinking about where price can go that's going to hurt the most people. Simple as that. That's because what do we know? We know price runs towards liquidity, right? It runs on highs, it runs on lows. It does the opposite of usually what most people are doing, right? So I'm always having this approach. Where is price going to go that's going to hurt the most people? As simple as that. And I factor that into every single setup. I look for break retest levels. I look for trend lines, and I factor that in. So here is my markup from today. Okay. Before I even get into this, I'm going to go up here to the 1 hour. I'm going to take some of this off just so we can clearly see everything here. Okay, so here is the manipulation here, and I'll highlight this manipulation. So with this here and that impulsive move afterwards, right? This run on all these highs, strong impulsive move. We have this low here, and then we have this low here. Okay, so all of this price action here, what is this? This is rebalancing this move here, and this is all internal structure. So we have our kill zone here. So when I look for entries as well, I'm always looking for price to run on highs, capture liquidity. So we saw that here. Price ran up and captured this area here. Now this line here was my first entry here. If price came, it actually was a little bit higher. I think it was, I forget exactly what it was, but it was on a lower time frame in this wick here. And price just came short of it. And I was perfectly fine with that. And then when I woke up this morning and I marked up my charts, this is what I saw. That is what I saw here. And you can look at this, there's a couple of different time frames. Actually 5 minute, 1 minute might be the best. You can see it there, right? You have kind of like a wedge pattern forming, right? So how are these traded? From a retail standpoint, like when you look at patterns, how are patterns traded? How are like support, resistance, and things like that traded? How would somebody trade this, right? When you got these wedge patterns, or you got this trend line here, how are these traded? How are these traded? In my opinion, right, based from my personal experience, they're usually traded one or two ways, right? Some people will do, buy stops up here and put stop losses under here, and they're trying to catch that breakout. Other people will do things like this. When price breaks this level, they'll look for that break retest, something like that. They wait for the break and they close. Yeah, that as well, right? They'll wait for price to break out, close, and look for a break of structure and then look for that move. So this is what I was looking at today. And this is the markup that I had. This is my directional bias was on point. This happened at a really unlucky time. Like I said, I usually don't like pulling an entry if it's there when New York, I guess I should rephrase that. If it's a lower time frame and tight stop loss, I usually don't like executing when price is at my point of interest for like a pair like this or gold at New York London overlap. When New York opens at 8. Same thing with like US 30. If price is like at my point of interest right at 9:30 a.m. Eastern when equity is about to open, I typically don't like that. I like for price to be short of it and then push into it, the volume, and then go. But my directional bias was on point here, but price was at my point of interest, literally right around a little bit higher up prior to right around like New York open. And then that's sent spreads kind of going, and I got stopped out of this. But this was a 3.5 pip stop loss here. So we're looking at those two lows, right? I was looking at this low and then that big low, knowing that if we're looking at this pattern, if anybody's trading the breakout, and I'll run the price a little bit. So I saw this happening. There's the break retest right there. Okay. Okay, there's the break of structure. You can see it better on like a higher time frame. So anybody that's entering off of this or on something like that or any type of breakout, their stops are going under that low. Okay, so that's target number one. And then if you look at that other big picture too, if people are buying just off of this one here, if people are buying off of this, right, this is simple structure here, right? Higher high, looking for retracement. And then people are also looking at this, right? And this is retail and smart money. Smart money traders are also doing this, right? Whatever that might be. Stop losses under this low here. So that was this low here. Those are my primary two targets. And then these are the longer term targets here. Those green lines are targets, okay? Does that make sense? Everything up to this point here? Guessing last high was around 10 a.m. UK time. Divergence on 1 and 5 minute charts still might come back to take it and go. So we had this manipulation here, right? This was a run on highs, a run on this stop or this trend line here, and then that created these lows down here. So I was very interested in executing this candle here, especially because I had my time and price confluence. I knew where everybody was entering, right? If you're buying in either of those situations, stop here or stop under here. And that's what I'm really focusing on today, right? Where is price gonna go that's gonna hurt the most people? If like I look at it, how I'm gonna view things and how my approach and how my understanding with my strategy, the way I trade, my confirmations, and then I always take it with the retail perspective. How are the majority of people trading these patterns or trading this structure, right? And then I determine where can price go that's going to hurt the most people. I'm not just opening up a chart and I'm hunting a setup and I'm looking for manipulation and I'm looking for certain things. I want to know where price is going to go. And I accurately can do that by determining, to the best of my ability, I'm not going to get it right every single time. You shouldn't try to, but I always try to determine where price can go to hurt the most people. And when I looked at this setup, it was those two lows here. Does that make sense for everybody so far? So if I'm getting tagged in on this entry, in my entry, let's say I get a bounce here, right? Then you'll have break retest levels, and you'll have the breakout confirmed with this pattern here, this trend line, and depending, this is why trend lines are so subjective, right? I mean, this line could literally be this. It could be that. It could be this, right? Something like that. Could be this, right? It's just such a subjective way of trading. But if I'm going to get my bounce off this too, I know that a lot of people are going to be getting in on that retest, right? They're going to be looking for that breaker structure after that breakout, and they're going to be looking for something like this. When I'm already in there selling and their stop losses are going here, or the other buyers, they're putting their stop loss under here. And my targets are where the majority of people are putting their stop losses, areas where, big liquidity is starting to generate. Just catch up with the chat. So this is what took place. Okay, so price started to push up, and and here is 8 o'clock. Let me get the vertical line. Here is 8 a.m. right there. So that vertical line right there, that represents New York over, the New York-London overlap. And that's one of my big influences there. That's where I'm looking for impulsive moves. There's a lot of volume. This is the most volume that's in the market during New York and London overlap. So this is what I was looking at here. Okay, so price starts pushing up, and you can see it's right around New York. So there's New York, a little push down, right? Obviously too, right? You got a break retest level here, okay? This is probably enticing more traders to come in as buyers. Okay, so that's right around New York open here. So 3.5 pip spread, and then this is when price started to pull up. It pulled a little bit deeper than I'd like it to, so you can see right there. Now, typically, I have very low spread on the accounts that I trade, and even if I usually add to it. So if I have 0.3 for a spread, I'm making this 3.5 pip stop loss 3.8. So that would technically bring my stop loss something up like that, just a little bit, right? I never put it right on that high. I'm always factoring in spread, but this came so high up, right? That was the very top of it right there. That was like a pip at. So the spread at this time, this is typically why I don't like executing trades when price is at my entry for the overlap or for equity. The spread bit me on this one, and this one definitely hurt a little bit. So right here, we saw the run on these highs. Price came up, respected this manipulation area here, did not surpass that high there. This was just an unlucky situation of how high it went. Can anybody also tell me what pattern this is? And this is more directed at EFXU members. What pattern is this? What pattern is this? Yes. Yes, Jamal. This is the bypass. This is the bypass. Here's look at this area here, right? This ran on highs, made a low, came back up, tested it, pushed down, came back up, tested that area again, then pushed down, right? So a lot of people, even on situations like this, trading these trend lines here, right? Moving their stop loss down to break even, moving along these highs, right? So there's a lot of liquidity generating on these highs. That's why I love these. I find the manipulation when I see highs like this, right, I just know a lot of liquidity is generating. Even if somebody is looking to sell off of this trend line, where are they putting their stop? Up here or up here, right? So this is running on all of these highs up here, respecting the manipulation, and then running on the other side, attacking the lows. So this was my entry here. I got stopped out literally by maybe a pip and a half due to the spread spiking higher than normal for the overlap. And this was a 3.5 pip stop loss. But mine was a little bit bigger because of the spread. I think I had like 2.2 at the time. And then the bigger target, we're looking at 13 to 1. So risking 1%, you're looking at 13%. Risking 2%, you're looking around 26%, give or take. And then this is what happened. Okay, so right here, before I play it further, a lot of traders, again, really depends on how they draw their trend lines, right? Something like this or whatever. This is where these are how these patterns are traded, right? These are how all retail patterns are traded. You're catching some type of breakout. You're looking for a break of structure, which you can see it, right? You can see it on, you know, multiple time frames here, right? Break of structure, breakout confirmed, right? A lot of traders too are now buying on this point of interest as well, loading up more liquidity below these lows here. Yeah, wedge. Yeah, I'm talking about not the retail pattern, the smart money pattern. Okay, so you know this wedge pattern, right? This is where people are loading up their positions as well, buying on this, right? Getting that breakout confirmation, getting the break structure confirmation, then looking for some retest, whether it's on this, you know, support resistance, whether it's on the pattern itself, whatever way it is, their stop losses are going under these lows. Okay, so let's continue playing this out. And then we can see price running to where it's hurting the most people. And then that's how you catch impulsive moves right there. Let me bring this back a little bit. I'll speed this up. And then you can see it started to run. Yep, you were right, man. It's a bypass pattern. Bypass patterns are a little bit harder to read at first because they're not as obvious. But changing that approach, when you look at these charts, right, it's looking and observing what the majority of people are doing to the best of your ability, right? And kind of really estimating where people are entering, where people are putting their stop losses, where liquidity buildup is happening, factoring in time and price, factoring in higher time frame manipulation and structure, knowing that we're trading all internally right here. So big picture, if we're going back to that 1 hour, zooming out a little bit, right? Let me see if I can get that to look a little bit better here. Right, so you have this candle here, right? That's the manipulation. We're looking for that retracement back into that kill zone, into this manipulation area here, and then we're just running, right? This is the continuation. We're looking for that to run on all of these lows here. Boom, equal lows here, this low here, and then that pattern that I marked up this morning. Okay. Another trap. Yep. So does that make sense to everybody? So like there's a couple of things that you really want to pay attention to, right? When you're looking at, you know, these, a lot of people, right? They instantly were thinking buying, right? You really need to run through a couple of things. Where's the higher time frame manipulation? And you can identify that a couple of different ways. I focus on New York London overlap, that's why these colors are on the background. That's the only indicator that I really focus on. And that's just so I don't have to do it manually. Time and price. Green, London, the maroonish color, New York London overlap, the red, New York, and the white is Asian session, right? So these impulsive moves, right, are typically happening in London and New York. And I look for that manipulation. Seeing this, that's all I needed to see to be bearish, especially with the rest of the structure, right? And then you're looking for price to break down. And then that's where we have this pattern today. And then after that, look what we have here. Let me get rid of this. So that was the setup there. I was a little bummed on that because that would have put me over my goal for the FTMO account after cashing out already. Sorry, my mouse froze up here. And that would have been a beauty. I probably would have took the majority of my position off the table after this low here, because that probably would have been like 6, 7-ish to 1, maybe a little bit more, and then rode the rest of it here. And that would have easily passed, not passed, I'm already passed. That would have hit my goal. And I would have been looking at cash out. Well, did I get back in? We're gonna talk about that really quickly as well. I just want to make sure, does anybody have any questions about anything that I'm talking about? Or anything that we just reviewed, or something that's not making sense? No questions on what we just looked at? And here's the, I'll also show you guys the update if you guys want to see it, because I've been trying to be very transparent about the FTMO since the challenge and then getting on the live accounts too. So I can also show those accounts, the account history in the back office of the FTMO if you guys want to see that as well. You can just let me know. So what do we have now? After this pattern here, what's there now? What do we have now? Chat's quiet. What do we have now? Yeah, SIG, right? Manipulation right here. This ran on highs and then created a low, right? So that would be our new point of interest here. Right, so I can just add that here. Especially because this came to that low where I had my TP there, but it never broke it. So that's technically, with that, you know, that's equal lows right here. See, we have this double bottom here, but that's perfect equal lows. So now you have a nice expansion here, manipulation candle, and then let's just bring it to current price action. New point of interest and an SS. Yeah, so the person who asked if I got an entry, this is where I got my entry off of this. I took the 5-minute here. I had to manually pull this, but you can see what happened here. Build up of liquidity, highs here, price ran on the highs, coming into the wick of this manipulation candle here, and then push down, and now we have like another little signature pattern here. Pull back, have to drop for a correction. Yeah, so I mean now, yeah, that's all it is. Now you have the targets, you have the manipulation, and you have nice impulsive expansion here, right? And you can see there, nice 30-minute candle as well. And price kind of came down, spiked up above these highs, same thing as previous, right? Respected the manipulation, broke down. Looks like there might have been like a little signature pattern in this, which it might have tested. We can take a look. Which it did, right? New manipulation here, nice little signature pattern, range, right? Price ran on the highs, came down, manipulation there. So that could have also been an entry too, if let's say you were looking at that 5-minute and didn't pull it on this, right? That's your new entry there, which obviously already hit and started to break down. And I'll bring over the FCMO just to give you an update of where I'm at with that really quickly. Okay, so here is the actual challenge here. Here is the verification. So this was the 10%. This was October, right? This was the 5% for the second qualification. Here was the live account here, 10% cashed out after 2 weeks. And here is the second. So they give you a new live account. Every time you cash out, they wipe the account and they give you a new one that starts back at the starting balance. So after this account here hitting that, I think it was 10.4%, cashed that out, and then got this new account, and this one's currently running 6%. And once I hit 10% on this, do it all over again, cash it out, and then restart it. And this is consistency right here. This is 30% and it's like mid-October. But, and that's not to like, you know, make anybody feel any type of way or for me to be like, you know, bragging. I do think I said since day one, I'm going to be extremely transparent about that. I think it's important that, you know, if somebody's talking to you about something and educating and you're, you know, whether you're spending money with this person or not, you want to see if they can actually do what they say, right? And have, you know, not just show you a nice winning trade, right? Winning trades aren't anything, right? Show me your taxes, show me the money, show me the consistency. I'd rather see consistency all day. And that's what I plan on doing with this account. 10% every 2 to 4 weeks, cash that out and you know, scale this. As soon as January hits, I'm going to start adding on the other accounts, start scaling the accounts. I haven't done any other additional challenges. Now that they're all paying for you, you know, it's all free rolling now after that first cash out, which I think was 8.3K. So now I got about 5K locked in, 5.2K locked in right now if I were to cash out right this second. So now I'm going to take that money, right, and buy the 200K challenge and then another 100K, and then you max out at 400K. So that's the plan in January. But again, it's just, you know, I think it's just important to have the transparency. And again, it's, you know, you want to make sure that the person that you're actually learning stuff from can show you consistent results and have that transparency. And that's all that is. If you've been in the Discord, if you've been following that, you know I've been showing this. I've been showing real trades in real time and all that good stuff. So there's the update on that. Should have had that banged out today. If this GU trade didn't stop me out, I would have been probably right around 15 and cashing that out as well. So, but early in the week, early in the month. So, all right. So does anybody have any questions about anything that we talked about today? I just wanted to get on here and show you that, right? Those two things can really change your approach to trading, right? Finding that manipulation and determining if your price action that you're focusing on is internal or not, right? All that price action that we were talking about was internal from that manipulation that was created on NFP last Friday, right? So it's selling. You're looking for selling, and you're you know, taking that other approach that we talked about and aligning yourself where, you know, you're thinking to yourself when you're marking up your charts, where can price go that's going to hurt the most people? When I say hurt the most people, I'm talking about stop people out, right? That's what we're focusing on. That's really what you want to get behind. And that's how you can follow smart money, right? Look for manipulation, get aligned with your entries and your stop losses with manipulation, avoiding places that even when you find something, if you're a smart money trader and you find something what you think is manipulation, changing that perspective and always keeping up front, like where can price go to hurt the most people, that can help you prevent putting your stop losses where, you know, majority of people, if it's a retail pattern and you see something that might be, you know, good for an entry for manipulation, but you can see it might be inside of a retail pattern or a retail support resistance, just knowing that and understanding where price can go to hurt the most people can help you avoid, you know, losing trades, right? Putting your stop losses in those areas that are most likely going to get run on, highs and lows that are going to get run on. So taking all that stuff and factoring in time and price and putting your TPs and your targets where, you know, price can run to hurt the most people, that can be a game changer for your approach to your marking up and executing your trades and overall your results. So we're about 45 minutes in. So we're gonna take a few minutes, any questions, and then we can wrap this call up. If you guys got value from this call today, drop some fire in the chat. And if you have any questions, drop them in the chat. We'll hang out for a few minutes. I'll answer any of those questions, and then we can call it. Can you explain why your stop was so tight? So, I mean, you know, there's a couple factors in that, right? So I've been doing this for quite some time. I have a lot of experience, and when I find manipulation, there's things that you can do to get tighter stops, right? When you get tighter stops, it's not something I recommend for people who are just learning, who are just starting out. I recommend focus on, you know, bigger, higher time frame candles, higher time frames in general, right? And then really focus on your directional bias, getting that down first. And then once you get that, right, you can start getting into tighter entries. Tighter entries are just going to do a number of things for you, right? You know, it's not for everybody, right? It depends on, you know, your availability, lower time frames. Yeah, you know, I'm in my office in the morning. I'm actively trading. I do a lot of lower time frame stuff. Lower time frames, what they do for me is provide tighter entries. Tighter entries equal bigger risk to reward and less moves, right? So you were looking at a 13-to-1 risk to reward there, about 26% gain, risking 2%. I did that 6%. Just about all of that FTMO stats I showed you was risking 1%. So that's about 30% risking 1%, right? So I can get better risk to reward, you know, moves like that, a 3.5 pip stop. It's based on the manipulation, right? So like, I'm not just randomly putting an entry there, right? That was the open of the manipulation candle, and the stop loss was on top of that candle, the top of the wick. That was a 3.5, right? So some pairs just provide that, like, you know, a pair like EU, right? A pair like Euro Great Britain. If that was gold, that might have been like a 15, 20 pip stop. But the majority of my stops personally, anywhere between, you know, 5 to 15 on average. But I know people who do, my trading partner, for example, only takes 1 hour, 4 hour. His average stop is anywhere between 20 and 40 pips, right? It's just different style of trader, you know what I mean? And that's different. I mean, look at Mirko. Mirko, his average stop loss is probably like 2 pips, 3 pips. You know, Luke probably averages 15, 20 pips stop, right? I mean, it's just, it really depends on the person and the style of trader you are, your edge, and all that stuff. So I had a similar 1 hour setup off FT manipulation on AU, but it just went straight through entry. Did I miss something? I won't be able to review charts here. If you want to send that in one of the groups, we can take a look at it. But I already stopped sharing. Can we go over price direction soon? So determining your directional bias. Yeah, we can do that maybe next week. We can do that probably next Tuesday. But a lot of what I discussed today too, I mean, a lot of that has to do with it. So my advice to you, if you're looking at a monthly chart, one of the biggest misconceptions for people when they load up a weekly, monthly, or even daily chart is that they're not factoring in a lot of major significant things because they think it happened so long ago. How does it hold any relevance? So like, what I would challenge you to do is when you mark up a monthly or weekly chart, like if I gave you a chart, right, and I told you it was a 1 hour chart, but in reality, and I hit it, and in reality it was a monthly chart, you would mark it up completely different, right? So don't put that title of a monthly, weekly, and have it limit what you're doing when you're marking things up, or your vision or your approach. So with that being said, when you're marking up a chart, mark it up like you would with any other time frame. Mark it up like a 1 hour chart, right? I mean, we've showed examples of points of interest being targeted and respected for reversal points and for entry zones that happened years and years ago. EU is a perfect example. Euro odd, go to a Euro odd weekly time frame, monthly time frame. Look at that massive signature pattern. Precision on a monthly time frame, manipulation that was at the all-time high, created years ago. EU, same thing. Before this massive bullish move, it came and filled in balance from years previous, right? So don't limit your approach to the marking up of the higher time frames based on, okay, this is so long ago, it's not of any relevance. Come to those time frames like it's a 1 hour chart. All right, so I don't see any other questions. Homework is key, great insight. So I'm not seeing any other questions, so we can probably just wrap it up there. How often do you do live sessions a week now? You're on Facebook with the Discord gone. So we've been doing once a week in here consistently. So we do other stuff in here as well. We drop value posts. We'll do, you know, like a recorded training. We might drop that. It's all random. But one thing is for certain is Tuesdays, that's the day we usually go live. All right. Well, hope you guys got value from this. The recording for this will be available right after I end this call. And for any of those other questions, if you're watching the replay, drop #replay. You can drop your questions in there, and we usually monitor, you know, the comments, and we can come back and answer those for you if you're watching this on the replay. But other than that, we can just call it there. Hope you guys all have a great day. I'll see you in the next one. And yes, EFXU is always Friday. The Friday Q&A that's consistent. So for all you guys, for all the EFXU members, I will see you on Friday. Take care, everyone.